Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I will be discussing about inventory valuation using weighted average method. If you have been following me along, this will be my fourth video on this topic. The first video, I discussed what inventory valuation is, the various methods of evaluating inventory, and I show some workings on how to calculate the inventory. So in the second video, I discussed inventory valuation using the FIFO method, under which I gave question and solution to that question. The third video focused on inventory valuation using the last in first out method, which is the LIFO method, while this is the final video, under which we will be taking an illustration on inventory account using the weighted average method. So if you are talking about weighted average method, the average cost of inventory or stocks are estimated to determine the amount at which the stock or inventory will be issued out. Just like I said before, inventory valuation focus on the cost of goods sold. That is, what is the cost of the goods sold? So that's what we are talking about. To determine the cost of the goods sold, there are different methods: FIFO, LIFO, and the weighted average. I've discussed about the FIFO and LIFO method, and this one focuses on the weighted average. And to determine the average stock, there is formula for calculating the average stock of inventory. That is, the weighted average will be equal to the total stock or inventory value divided by the total quantity, that is the total quantity of the inventory. By the time we get to the inventory account, we understand better. So if we have the average stock, so the total amount of the inventory will now be average stock, average cost of inventory multiplied by the quantity to be supplied. So just like I said, in the preparation of inventory account, there are 4 details that are required. We have the date, we have receipt, we have issued, and we have balance. Date is meant to record the date in which the transaction takes place. The issue side is where all the inventory receipt will be recorded. The issue side is where all the inventories to be issued out will be recorded. While the balance column is meant for the amount of inventories that are left in the store. So in our inventory account, we are going to have date, receipt, issue, and balance. Under receipt, issue, and balance, the details of the inventory will be recorded. And what are those details of the inventory that will be recorded? This include the quantity, that is how many inventories received, how many inventories are issued out, how many inventories are left in the store, at what price, that is the unit price of the inventory, and what is the total value of those inventory. That's the reason why each of the columns is further split into 3: quantity, price, value. Now let's take an illustration. Jumia store started a cement business with 150 bags of cement at 2,000 naira per bag on the 1st of January 2022. During the month, the following transaction took place. January 3, purchased 30 bags of cement at 2,100 naira per bag. January 8, sold 40 bags of cement. January 10, purchased 25 bags of cement at 2,200 naira per bag. January 15, sold 45 bags of cement. January 23, bought 50 bags of cement at 2,500 naira per bag. January 27, bought 20 bags of cement at 2,700 naira per bag. January 30th, sold 40 bags of cement. You are required to prepare the store account, that is the inventory account, using the weighted average method. How do we go about it? Just like we had it in my previous video, the first thing is to show the workings. So let's open our workings. So the first entry, Jumia store started cement business with 50 bags of cement at 2,000 naira per bag on January 1st. So that is January 1st, 50 bags of cement at 2,000 naira per bag. So that will be 50 times 2,000 naira. If we multiply 50 times 2,000 naira, it's going to give us 100,000 naira. Now let's go to our inventory account. So the date, January 1, that is 0101. Quantity, that is 50 bags of cement at 2,000 naira, while the value is 100,000 naira. Under the issue, since we are receiving, so we don't have no entry, so we are going to push dash under that. Under the quantity, there is no quantity before, so that will be 50, while the price will be at 2,000 naira, while the value is 100,000 naira. Then the next entry, January 3, purchased 30 bags of cement at 2,100 naira per bag. Let's go back to our working sheet. So January 3, 30 bags of cement at 2,100 naira per bag. That is going to be 30 times 2,100. If we multiply 30 by 2,100, that is going to give us 63,000 naira. So now going back to our inventory account. So the date, which is January 3. So the quantity, so that is 30 bags at 2,100 naira, which gave us 63,000 naira. Under the issue, we don't have information for that. So under the balance, the quantity will now be, they have 50 in the store before. Now they have bringing extra 30. That will be 50 plus 30. That's going to give us 80. So at what amount? We are talking about the weighted average, so we will leave that for now. So if we are now talking about the balance, that is the value, that will be 100,000 plus the 63,000 that they are just bringing. That will be 163,000 naira. Then the next item, January 8, sold 40 bags of cement. That's where we are. So now this time around we have sales that is issued. Under the issue, January 8, 40 bags of cement. So at what amount? Remember, we are using weighted average method. So what is the formula? Weighted average method, I said the formula for weighted average method is the total amount, that is total value divided by total quantity. If you are talking about the total value, that is, we are talking about the balance. Under the balance here, the total value is 163,000, while the total quantity is 80. So which means they have total amount of bag of cement they have in the store is 80, while the total value of is 163,000 naira. So now the average inventory, that is the weighted average, will now be 163,000 divided by 80. So if we divide 163,000 by 80, that is going to give us 2,038. If we approximate, which means that is the weighted average per bag of cement. And now they want to supply 40 bags of cement. 40 bags of cement will be 40 times 2,038. If we multiply 40 times 2,038, that will be 81,520. So that will be the amount in which the inventory will be issued. So let's go back to our stock account. Date January 8, that is 0801. The receipt, since we are issuing, that is going to be dash dash dash. So now issue. The quantity is, what is the quantity? That's 40 bags, and amount is how much? 2,038, while the value is 81,520. So that is the quantity 40, the price 2,038, while the value is 81,520. So the balance now in the store, we have 80. Now they are supplying 40 out of the store. That will be 80 minus 40. That is going to be 40 under the balance. So if you are talking about the price, so it is going to be 2,030, since that is the average cost. So 2,030, and the value will now be 163,000, the total inventory in the store, minus 81,520, that is the one to be supplied out. If we subtract that, so that is going to be 81,480. Then the next item, on January 10, purchase 25 bags of cement at 2,200 per bag. Let's go back to our working sheet. January 10, 25 bags of cement at 2,200. That is at the receipt side. So that is going to be 25 times 2,200. If we multiply 25 times 2,200, that is going to give us 55,000 naira. That is, the quantity is 25, the price is 2,200, while the value is 55,000. Let's go back to our inventory account. The date, January 10, that is 10/01. The quantity is 25, the price 2,200, and the value is 55,000. That is quantity 25, price 2,200, and value 55,000 naira. Under the issue, we don't have information, so that will be dash dash dash. While under the balance, the quantity will be 40 plus 20 we are receiving now, that will give us 65. While the price, now we do not determine the value of the at which what will be the average, since we don't have the total. So now what is the total? The total will now be 81,480, which is the value at the balance, plus the one they are just receiving, which is 55,000 naira. So that is going to give us 136,480. So now the next entry, which is on January 15, sold 45 bags of cement. Now let's go back to our working. So January 15 under the issue side, 45 bags of cement. If you remember, the first thing is to calculate the weighted average. So what is the weighted average? Let's go back to our inventory account. If we look at the value, we have 136,480. That is the total amount of inventory, total value of inventories in the store. How many? What is the quantity? That is 65, which means the weighted average will be 136,480 divided by 65. That is 136,480 divided by 65. If we divide that, that is going to give us 2,100 by the time we approximate. So now they want to supply 45 bags. 45 bags of cement will now be 45 times 2,100. If we multiply 45 times 2,100, that will give us 94,500. So now let's go back to our inventory account. The date, January 15, that is 1501. Under the receipt, we don't have information that is going to be dash. So under the issue, what is the quantity? Our quantity is 45 bags. At what is the unit price? 2,100. The value is 94,500. That is 45 bags, 2,100, 94,500. So now balance. So the balance, the quantity, they have 65 in the store before. Now they are supplying 45 out. That will be 65 minus 45. That will be 20. So the price will still remain as 2,100. Why the value will be 136,480 minus 94,500. That is going to give us 41,980. Then the next entry, which is January 23, bought 25 bags of cement at 2,500 naira per bag. Now let's go back to our workings. January 23, 50 bags of cement at 2,500 per bag. That will be 50 times 2,500. If we multiply 50 times 2,500, that is going to give us 125,000 naira. Now let's go back to our inventory account. Date, January 23. So the quantity, that is 50 bags of cement, are 2,500 naira, while the value is 125,000. Under the issue, we don't have the information for issue. That is going to be dash. Why the balance? The quantity will be, we have 20 in the store before. Now they are supplying 50. 20 plus 50, that will give us 70. Under the price, so we've not ascertained the pricing, so we don't know what the total is. So under the value, that is the total balance, that will be 41,980 plus 125,000. That will give us 166,980. January 27, bought 20 bags at 2,700 per bag. January 27, back to our working season. So 20 bags at 2,700. Now that will be 20 times 2,700. If we multiply 20 times 2,700, that will give us 54,000 naira. That is 20 bags of cement at 2,700 naira for the price, while the value is 54,000. Now go back to our inventory account. January 27, that is 2701. So we have 20 bags of cement at 2,700 per bag, which give us 54,000. Under the issue, we don't have information for issue. That is going to be dash. Why the quantity under the balance? The quantity will be 70 plus 20. That will be 90. The price, we don't know the price for now since we don't know the total. Why the value will be 166,980 plus 54,000. That will give us 220,980. Now back to our question. The last entry, which is on January 30th, sold 40 bags of cement. So what will be the workings? January 38th, 40 bags of cement. The first thing is weighted average. What will be the unit price at which the inventory will be issued out? So the weighted average, if we go back to our inventory account, the total value is 220,980, while the total quantity is 90, which means the total value of inventory in the store is 220,980, while the total number of bags of cement that are in the store is 90. So the weighted average will now be 220,980 divided by 90. That is 220,980 divided by 90. If we divide that, that is going to give us 2,455. So for 40 bags of cement, that will be 40 times 2,455, and that is going to give us 98,200. Now let's go to our inventory account. So January 30, that is 30/01. Receipt, since we don't have information for receipt side, that is going to be dash dash dash. So for the issue, so we have 40 bags of cement at 2,455 naira per bag, while the value is 98,200. That is 40 bags of cement at 2,455 naira, 98,200. For the balance, the quantity will be 90 minus 40, that is the 90 bags of cement that is in the store, and minus the 40 that is to be issued out. That will be 50 bags of cement, while the price will be 2,455, while the value is going to be 220,980, which is the total value of the inventory in the store, minus 98,200, which is the value of the inventories to be issued out. That will give us 122,780. That is how to prepare the inventory account. Now, if we come to the receipt side, if we had all the values together, let's close the account. So that is going to give us 397,000 naira. That represents the purchases for the month of January. So if we go to the issue side, if we had all the values together, that is 81,520 plus 94,500 plus 98,200. That is going to give us 274,220. That value represents the cost of goods sold in the case of a retail or a wholesale business, or the cost of raw materials supplied or used in the case of the production process. So if we now comes to the balance side, the last balance, which is 122,780, that represents the closing inventory, which is otherwise also known as the closing stock for the month of January. That is all about the inventory valuation account. Don't forget to subscribe to the channel, like the video, and share it with others for them to also benefit. Also click on the notification button to receive notification for my next video. You try to follow along as I have outlined the list of topics to be treated in this tutorial. Also, you can visit the channel, check out the playlist